Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell, and as promised from our interview on Thursday, the 15th of December, we have Rick Rule back yet again to discuss, instead of gold, uranium. Now, Rick, it's a known fact that in the newsletter business, the more bottoms that you call and forecasts you make, the better chance you have of getting one right. And I say that jokingly because last week on December 6th, Palisade Research rushed to put out a call on the bottom in uranium and uranium stocks. We'll have to see if that was an intelligent or prudent move as we look back. But Rick, give it to us straight here. Were we correct possibly in our call?
My own feeling is that the uranium juniors go lower next year. One of the things, again, about being around 40 years is you make lots of good calls and lots of bad calls. The $20, $21 a pound yellow cake number is a very, very hard number. And until we begin to see restarts in Japan, I don't think that we're going to get much help in the underlying commodity. I'm certainly of the opinion that the sell-off below 20 was capitulation selling. The difficulty is with the very large Japanese utility inventories, I'm not sure that we won't see that capitulation continue. But make no mistake, the junior uranium stocks want to go up. I think in many cases we have exhausted, at least in the near term, the sellers that had to sell. And we are in a situation where a little bit of buying overcomes no selling, and the stocks want to go higher. We have recently at Sprott done a couple of very small private placements in very small companies. And in each case, we were sort of triple oversubscribed. Now, using us as a market indicator is probably ill-advised, given that our customer base are predisposed to risk and predisposed to commodities. But the truth is that the market capitalization of the viable uranium juniors in aggregate is so small that if we in fact have exhausted the sellers, then the buyers can take plurality. My own feeling is that we will experience a bottom sometime in the summer, in the summer of 2017. But believe me, my crystal ball is cracked and cloudy.
Rick, since last week, uranium is up an astounding 19% for the spot. Now, of course, uranium price started the year around $30 and dipped all the way down to around $18, which is a pretty astounding drop during a time when most commodities were going up. Do you simply see, as you kind of just indicated, that we're seeing a V-shaped recovery off of levels that were unsustainably low?
No, I think both numbers were false. I think the fall occurred on very little volume. And I think that the recovery has occurred on very little volume. I am of the opinion that the uranium market will likely continue weak until we see real progress on the Japanese restarts. I think almost everything else that we're seeing in that market is simply noise. There are 24 restarts in Japan, as I understand it, that are in the permitting process. And if those restarts occur on a timely basis, a really interesting thing happens, which is that a very, very, very large amount of existing inventory that is weighing over the market comes off market. And I think if you see, I'm saying if, Colin, not when, if you're seeing restarts occur on a timely basis, that the up move that you'll see in the yellow cake price, both in terms of the spot market and the term market, will firm very dramatically. If you don't, then you will continue to see some inventories come into a market where the demand side is extremely weak. And you will see circumstances like we saw 3 or 4 weeks ago repeated. And I'm not smart enough to tell you which outcome is going to occur.
Rick, whether the uranium stocks have bottomed now or will bottom sometime in the summer of 2017, I want to discuss your past experience with them. It's no mistake, as we pointed out in our newsletter, that guys like yourself or Marion Katusa or Doug Casey talk about uranium with such passion because so much money has been made for you all during the right times and life-changing, really. Why is it or how is it that uranium stocks move so violently?
Well, you can see me smile. In the first instance, uranium stocks collect disgust. When uranium has performed poorly or when it has bored people, it isn't regarded as just another commodity. It's regarded as the stuff of Hiroshima, Nagasaki, 3 Mile Island, and now Fukushima. In other words, people hate it viscerally as opposed to merely being bored by it. It's also a commodity that when it becomes underpriced, becomes dramatically underpriced. Dramatically underpriced, I'll give you an arithmetic example of that's current. It is estimated by the International Energy Agency that it takes about $60 a pound to make uranium fully loaded. That's including the cost of capital, not merely production costs. So you make the stuff for 60 and right now you sell it for 20. You lose $40 a pound and try and make it up on volume. That means that in order for the lights to stay on 6 years from now in North America, the uranium price has to go up. The other side of the equation is, can it go up? Can the power producers afford to pay more for uranium? And here the answer is yes, too. It takes a very small amount of uranium, really, to operate a big nuclear power plant. Fuel costs are often 3 or 4% of the total budget of the plant. If the uranium price doubles, it doesn't change demand for uranium an iota. So the price can go up and the price must go up. So the price will go up. The answer that we don't know is, when will this occur? The thing that makes me particularly attracted to this bull market is that the last bull market in uranium stocks that we enjoyed was both dramatic enough, and when I say dramatic enough, things like international uranium, 19 cents to $18. Things like Palisade, depending on how you count, 10 cents a share or a low of 1 cent a share, to $10. Those moves were so dramatic and they were experienced by so many investors. And it happened relatively recently, maybe not in your lifetime, but certainly in my lifetime, an event that happened, 11 or 12 years ago, is recent enough that when the move does get underway, the market response to it, I think, will be extremely aggressive. It's also interesting to know that at the bottom of the last cycle in 2000, 2001, there were 5 uranium juniors. At the top of the cycle, there were over 500 uranium juniors. I would suggest to you that the population of viable uranium juniors has now declined from 500 to something like 20. And as the demand comes back into the market, of course, the fraud machines in Canada will create new phony baloney uranium companies. But I suspect that there will be 5 or 6 or 7 of the 20 that are in place today that will each generate 20-to-1 returns.
Just shortly, I guess last week or the week before, Sprott announced a lead financing for a small company called GoVX Uranium. I'm inclined to discuss this because we participated alongside Sprott for a small position in the financing. And we will be bringing on Daniel and Govin to discuss that, as well as David Cates, the CEO of Denison and Uranium Participation Corp., who's a director there. Rick, what can you tell us about a company like GoVX that has had a tremendous amount of money spent on a existing deposit and has a lot of pounds in the ground proven up?
I think execution will be what matters for GoVX. The next 12 months will be a wonderful time to do not much, to continue to advance, but only haltingly, their assets in Africa, which are not economic at $20 a pound, but rather a time to stake additional pounds in the ground that have been discovered through aggressive expenditures in prior market cycles. I like GoVX because I know 2 or 3 of their deposits reasonably well. And I know that the consequence of Govin's last name, that they have access to capital, both capital from the Friedland network and also capital from the Lundin network, meaning that if you give the market an excuse to support this stock, given the pedigrees involved, the networks that are behind the stock, that in the right set of circumstances, this could really, really work. It's important that people who participated in this placement not have expectations that are 12-month expectations. It's important that people who participated in this placement have 2 or 3 year expectations. You will note that the warrant that was structured with regards to this placement took into account the fact that the recovery in uranium prices might not occur over a long weekend. In other words, the terms of the financing were geared to the fact that a recovery in uranium markets and a recovery in the true fundamentals of uranium juniors rather than the market perception could easily take 2 or 3 years.
Rick, you're a huge advocate of the idea of optionality, and we've always discussed it as it pertains to gold and commodities that outside of the uranium space. But of course, optionality could exist when talking about uranium. There's several world-class deposits or sizable deposits. GoVX has a couple sizable deposits. When you are looking to invest at the bottom of a cycle like this, there's, of course, several different things that go into account, but you can probably structure 5-year warrants on quality assets like this. Do you prefer to go into something that's already established, or are you looking potentially at things that are looking for new discoveries like in the Athabasca Basin?
Frankly, when markets are in disarray like they are today, the answer is yes and yes. High quality deposits in the Athabasca Basin? Absolutely yes, provided that the management teams are rational and sober. Optionality? Yes. The problem with optionality, Colin, is that the management teams always, or at least almost always, screw it up. Playing the optionality game means that you acquire the asset and do nothing. You don't beneficiate the asset. Or at least you beneficiate it as little as possible, because the need to beneficiate it requires capital in companies that don't have any. And the very act of beneficiating it causes you to dilute your interest in the project. I have tried for 40 years to get the management teams in optionality situations to do the right thing, which is nothing, and to be paid appropriately for it. And while I have seen management teams that were willing to do nothing, I have never seen a management team that was willing to be paid appropriately for doing nothing. So the challenge in optionality really is the inclination that people have to, quote, beneficiate the asset, which is almost always a mistake.
Rick, on that note, I will let you get back to work. Thank you so much for joining us on our December edition of the Palisade Sprott Monthly Market Update, and we'll have to check back with you in the new years to see how everything is going with gold, uranium, and all other commodities.
A pleasure, Colin. I enjoy these conversations, and I hope they're useful for your subscribers. Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw material. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen, or are you too stupid?